I'm here with John from Australia. I'm at the New Orleans Investment Conference, and it's been a great conference. And John has a question for me.
Thanks, Mike. Thanks for your time. I'm obviously on board with many of your philosophies and investment strategies, but do you think it's important for investors to maybe have a hedge just in case we're wrong? And would the hedge be something like a 5 or 10 position in long-term US government bonds, or maybe a pro-US dollar position of some sort, just in case we're wrong and we go through a massive deflationary period like we saw after the Great Depression or in 2008, which caught a lot of us by surprise?
Okay, I think when it comes to gold and silver investors, central banks, especially the Eastern central banks, are putting a floor under gold and silver. I see bonds as something that are potentially dangerous now. The U.S. has had its credit rating lowered once again, and I think that's going to continue. I think there's just no stopping all of the reckless government spending, and that is going to be causing bonds to become more and more suspect as time goes on. But, I mean, if you believe a hedge is a good thing and you're only talking about 5 or 10%, be my guest. You know, people always used to tell me you shouldn't put any more than 10% into gold because gold is so volatile. And I went 100% gold and silver. I used to tell people that I'm fully diversified. I've got both gold and silver. So, I went fully into gold and silver, knowing the fundamentals underneath it, way back in the early 2000s, and for a decade and a half, it was my only investment, was precious metals. I didn't worry about hedging with anything, and it's been the number one performing asset of this century. Everything runs in waves and cycles, and we are in one of those cycles right now where gold and silver are really shining.
Could I ask a quick follow-up to that?
Sure.
For international investors, so for my clients and I, we're in Australia, so when we buy long-term US government bonds, whether it's via an ETF, we're currency hedged. So if the Federal Reserve goes into QE unlimited mode and destroys the exchange rate of the US dollar, we just get the price performance of TLT. We don't necessarily lose out on the currency. So maybe for international investors who aren't US dollar based, would a small hedge like that maybe make a little bit more sense?
That's possible, but it wasn't long ago that the Aussie dollar was at parity with the US dollar, right?
Yeah,
so
110.
Right, and so it isn't the US dollar that's been getting destroyed in value, it's the Aussie dollar is being destroyed in value faster than the US dollar is being destroyed in value. And I like to envision all national fiat currencies as skydivers. They've all jumped out of a plane and they're all falling at different rates, and gold is in the plane. You know, they're all falling relative to gold and silver.
Absolutely, great answer. I agree, the Australian dollar has been very weak. Not to disagree, I agree with a lot of what you're saying, but if we were to go through a commodities boom, the Australian dollar tends to be very strong as demand for base metals increase, energies increase. I think we have 35% of the world's uranium, which we don't really mine due to a lot of government restrictions. We don't fully utilise that. So in an environment where we are going through a global inflation, we might see the Aussie dollar perform long-term very well in that environment. So anyway, that's just that's not my base case, that's just my 5 to 10% hedge thesis.
I think you're absolutely right, but first you're going to see a global economic slowdown. The tariffs, the trade wars that are happening right now interrupt international trade. I'm trying to get my natural farming off the ground, and we've identified the very best mobile chicken coops made, but they're made in Poland. And so I'm having this problem where I'm trying to go, do I buy them now? Do I wait until mid-November when the Supreme Court is going to decide whether these tariffs are constitutional or not? And so it's put the brakes on a business that I was developing, and that means that there's a whole bunch of people that I didn't hire on my farm. So as I believe that the tariffs are one of the things, and then there will be something else that comes along that's a trigger. But I think we're going to go into a global financial crisis. I think it's going to be worse than 2008. that means there's an economic slowdown. There will be less real estate projects, houses built, apartment buildings built, cars built. As there's less stuff being built, base metals should fall. Now, at the same time, gold and silver will be in high demand, and Australia does have quite a bit of gold and silver, but their basic, your economy is wrapped around mining base metals and things. And so as copper and aluminum and everything else falls because of lack of demand, I don't think the Aussie dollar is going to gain in strength. So, I don't know. And I'm not an expert on those things. I study monetary history and I study the precious metals. And then the rest of what the economy is going to do is just an educated guess. And everybody is trying to figure it out. It's sort of like feeling your way around in the dark.
Absolutely, completely agree. And I would say, I agree that it's going to be worse than 2008 and also very different. This time, historically central banks have needed to keep interest rates 2 to 3% above CPI we need a positive real rate of interest. And what's happening, we saw it in Australia a couple of weeks ago, we've seen it in other countries where inflation is bottoming and starting to trend back up, yet central banks are already going through a cutting cycle. It normally takes 18 to 24 months for interest rate cuts to flow through to CPI, to consumer inflation. So they've been cutting rates aggressively as inflation is bottoming and picking up. So I'm very concerned to see where it's going to be in 2 or 3 years' time, as I'm sure you are.
Yeah, and cutting rates causes inflation to pick up even more. And so I believe that, we're getting toward an end game where the central banks are trapped. They've exhausted, they've got a toolbox of a bunch of hammers. Everything looks like a nail. The only tools that they've got are cut rates and, people say print, but it actually isn't print, it's type. You just type numbers into existence. The US dollar is nothing but a number supply, and you got to ask yourself, how many numbers are there? It's infinite.
Yes.
And so I've been saying a lot at this conference that national fiat currencies, the very math behind them, the way that a national fiat, if it's a debt-based currency, it's impossible for it to store value. It always has to fall in value, lose value over long periods of time. And therefore, they are not money, and people need to stop referring to them as money. If they're national fiat currencies, the only thing that has proven to be money over the last 2,500 years is gold and silver, but it sort of runs in waves and cycles. Gold and silver were the very worst investments that you could have from 1980 to 2000. They were awful. But ever since 2000, they are the best performing assets of this century, other than cryptos. But crypto is the first brand new asset class in like the last 900 years. So anyway, I want to thank you very much. Your questions were great. Anything you want to say?
No, thank you very much, Mike. Thank you for all that you've done. Thank you to Dan as well behind the camera for the Hidden Secrets of Money series. I make your TV series a mandatory starter pack for any new client that I take on in Australia. I say, here you go. If you want to learn about money, please watch Mike's series, Hidden Secrets of Money. It's a great series. Thank you for everything you've done.
Awesome. Thank you very much.